What's up, audit fans? Dr. Amanda White here with a video on the special provisions in ISA 610 about the internal auditor providing direct assistance to the external auditor on an audit of financial statements. Now, please make sure that you check in your specific country and jurisdiction whether this part of ISA 610 is permitted, because it is outlawed in a number of different countries. But let's get into it. ISA 610 is about using the work of internal auditors, and in a lot of jurisdictions this is usually about using work that the internal auditors have already conducted on the audit as evidence and part of our work as the external auditors. However, in some jurisdictions, ISA 610 does allow the auditor to direct or give instruction to the internal auditors and essentially have them working as part of the audit team. Today I'm going to dig into those provisions in a little bit more detail to make sure that we understand the requirements. What are the risks around using internal auditors? Well, ISA 610 says that the auditor needs to assess whether there are any threats to objectivity and independence as a result of using the internal auditors. Now remember, there are 5 threats to independence. There is the self-interest, self-review, familiarity, intimidation, and advocacy threat. Now, when we think about the risks around independence for internal auditors, it's probably not so much intimidation. There's definitely familiarity there because the internal auditor works with the people within the client. There is a risk of self-interest, especially if internal auditors own shares as part of an employee share plan with the company. There is the risk of self-review. They might be checking their own work. There is less risk, though, of advocacy because typically the internal auditors don't advocate for their clients. But remember, because they know these people that work within the business, even though they still are independent, typically with a reporting line directly to the audit committee, there is some threat. So we need to be very careful here, because if we are directing the auditors, it's like we're taking them onto the audit team. And so we need to follow the rules around the ethical standards and ISA 220, which is about quality control on audits as well. So we need to evaluate those people who are on the audit. Obviously, we need to make sure they're competent, but we also need to check their independence. If the internal auditor, for example, has to conduct some work, and we're going to ask them to conduct some work on an area of the accounts that perhaps a family member works on, then certainly there are going to be some risks in terms of independence. Rather than talk about the parts of the audit where we could direct internal auditors to conduct some work, I'm actually going to talk about the things that we should not get them involved in. So we shouldn't get them involved in areas that have high professional judgment, areas that are at high risk of material misstatement or around significant risks, and areas that are related to their existing work or future planned work as an internal auditor. So we can't get them to duplicate something that they've already done. Now, if we do decide that we're going to direct the internal auditor to get involved in some of our direct audit work, we need to supervise them. We need to evaluate the work that they're doing, evaluate any conclusions that they make, evaluate their evidence, how they're writing up their audit documentation. And we should also communicate with those charged with governance about what their planned role is and then the outcome of that. And of course, in your audit documentation, you should always include where the work was done by yourself as the external auditors, or where you've asked the internal auditor to complete some tasks for you. What areas of the accounts would you actually ask the internal auditor to directly assist you on? If they weren't planning to be involved in stock take, you could certainly ask them to count stock or be involved in supervision of counting stock, preparing documentation. But of course, remember, we have to think back. Is it something that requires significant judgment and interpretation? Is it something that is of significant risk? And is it something that they've already done before? So something like counting inventory or helping with inventory might be something that they don't do normally. And if they don't, they can certainly provide assistance in that area. Remember, this is jurisdiction specific, so check your specific country's requirements and regulations around its version of ISA 610 before you decide whether you can ask the internal auditors to provide direct assistance. Otherwise, the rest of ISA 610 is the same as the other video that I've talked about with ISA 610. If you have any questions about relying on the work of internal auditors or using the work of internal auditors, pop them in the comments. As always, if you thought the video was useful, I'd really appreciate a thumbs up. And if you haven't already, consider subscribing to the channel. That's it for this video, and I'll see you next time. Bye!